Inflation is the increase in price level of goods and services over a period of time. And Nigeria, being the largest economy in Africa, has been grappling with the issue of inflation for quite some time, as inflation peaked at 26.72% in the month of September 2023. Let's have another perspective and understand this, the causes, the challenges, and recommendations for businesses at this time when inflation continues to bite harder. I'm being joined by an industry expert and economist, Mr. Johnson Chukwu, who's the Managing Director and Chief Executive Officer at Cowrie Assets Management Limited. Mr. Johnson, it's good to see you. How are you today?
I'm good, Tolu. Good afternoon, and thank you for having me.
Well, 26.72% is not really looking too good if we are to look at the figures of inflation now. Let me ask, what were you expecting before we now talk about the fundamentals fueling these figures at this time? Are we going to continue at this pace as we move to the end of the year?
So I'm actually expecting a higher rate than the 26.7% that was reported. If you look at, we disaggregate those figures and you look at the major increases, I expected that we should have the increase on the transport segment or transport cost would have increased at higher than about 1.7% they reported there. Food and beverage items at a 10.7% increase. So if you consider that, if you compare the transport cost between this time last year, which was September last year, and September now, you will observe that virtually on all the routes in the country, the transport cost has increased by close to 100%. So I can't relate with the figure of less than 2% increase in transport cost. So if you adjust for that, I think we should be dealing with an inflation rate above 26.7%. Even your cost will tell you your costs, your expenditure will tell you that the big hole has been dug into your pocket.
True. I agree with you. Let's be a little bit elementary today and let Nigerians understand what that 26.72% actually means, maybe at cash at hand and all of that, Mr. Johnson.
Okay, what it means that if you have 100, if you had 100 naira on average, or whatever goods you bought 100 naira in September last year, this time around you were buying it for 126 naira 70 kobo. Or conversely, you can say that your income has been devalued by 26%. So if your total consumption expenditure was 100,000, the value of goods you bought for 100,000 a year ago, the best you can do, you can only take less than three quarter of that. You can only afford less than three quarter of that. So which also emphasizes the fact that while standard of living is deteriorating, the average household can only afford less about three quarter or 3/4 of what they used to afford last year. So the standard of living on average, for average families, have depreciated by about 26%.
Thanks for that. Very interesting. Food. Yes, that's where we're going to start from now. We've been talking around this, our agricultural policies, what's been happening with insecurity, and how we can help address this. And it's really getting this bashing when we see these figures. Mr. Johnson, what really is the reality on ground with regards to our agricultural produce, the level of produce, all the support that have been coming from government? When are we going to start to see this, get to see this food abundantly as it's supposed to be and cheaper?
Well, I think that's a $1 million question. The issues are, we know the challenges we have with food production in the country. And like I always say, an average Nigerian household, other than rich men like you, live on Nigerian produced food items. Look at what we eat: tuber, cereals. The cereals we eat are locally produced. The tuber we eat are locally produced. The vegetables, the fish we eat are largely locally produced. So, but the challenge is that because of displacement of farmers along the farming belts of the country, food production has actually declined. Because if you even look at the GDP growth in agriculture, you also see a very infinitesimal the government have been trying to provide cannot be effective if farmers can't go to farm. If you give a farmer, if you even look at, for instance, the anchor borrowers program, you have an anchor farmer who you lend to, who now lends to subsistence farmers or subsidiary farmers. If the subsidiary farmers can't go to a farm, then the anchor borrower cannot pay you back. And the quantity of food you had expected to be produced is not being produced. That is the core of the problem. The other ancillary challenges we're dealing with, issue of access to land, particularly commercial land for agricultural production, issues around irrigation to allow for better productivity in terms of cultivated land, issues about the yield of our most of the produce we produce, like rice. The yield we have here is far below the yield in comparative countries with similar climatic conditions. But those are, like I said, are like going to the moon. Let's even deal with the basic things, which is the issue of insecurity, so that the subsistence farmers we have today can produce enough food for us to eat well and then bring down the food inflation. Once we bring down the food inflation, the all-item inflation will come down.
Exactly. I totally agree with you. Price of fuel is also on the other side. A friend called me yesterday and said he bought fuel at a station for $5.80, and as at yesterday was buying for $6.50. NNPC has come to announce that there is no increase in the price of PMS at the moment. Diesel, in some cases, is also like 1,000 naira. Kerosene, more than 1,000 naira, as at the last check. Price of aviation fuel, also on the other side. Gas, for 12 kg gas, we know how much it's filling for as at today. So all of the effects of this will definitely have one bit on inflation. Can you please expatiate this for us?
Well, which is why I said that if you look at the inflation figure, actually expected it will be higher than that with 6.7%. Of course, if you look at the volatile item, which is food and energy sources, which are now grouped together, you will observe that about 30% increase in inflation. But if you look at what's happening to the energy sector, excuse me, for instance, what you just mentioned about the price of fuel, the challenge we have is that because of short supply of foreign exchange, and because subsidy has come back, irrespective of what anybody says, the landing cost of fuel today is higher than the pump price. So no market operator is important, only the NNPC is the important fuel. And when NNPC single entity is important, you have to deal with the supply bottlenecks in terms of the distribution channels. So that has been a problem. And I'm not sure they are importing the same quantity they used to import because of constraints in assessing effects. And that's why you're seeing that increase in pump price of fuel. And of course, that should dovetail into higher increase in transport costs. Then diesel you did mention, and it's very simple to look. If you look at ICE is in the region of $913 per metric ton. If you convert at current parallel market rate of more than 1,000 naira, so you're going to have a landing cost of diesel at more than 900 naira. And when you add the logistic cost of your depot charges, your jetty charges, NIMASA charges, and NPA charges, and then you add what you pay to NNPC as part of their fees, then you end up with a depot price of the region of 970 and above. So the traders, the marketers will have to add their margin and their transport costs of taking it to their filling stations. So we're actually going to be looking at something in the region of 1,000 naira per liter of diesel. And remember that most haulage vehicles use diesel as their means of energy or their fuel. So the haulage company that move goods from where they are produced to where they are consumed, we have to buy diesel at close to 1,000 naira a liter. And they have to factor into their cost of transportation. This cost of transportation will also add to the cost of goods when the merchants or the traders or farmers want to sell those goods to the consumers. And these are what we're dealing with. So we have a chain of cost increases driven by exchange rate, what you call pass-through effect of exchange rate, that's impacted also negatively on energy costs in the country.
Great stuff, Mr. Johnson. Now, as it is, subsidy is gone. Yes, that's no news. Federal government, state governments, local governments are getting more funds from the pools of or FAC, let's put it that way. And many will expect that they should bridge a gap talking about this disparity and all the challenges that we face around the economy. So I'm asking you, what more should we be expecting from the states, local governments to support Nigerians at this very critical time?
Well, the first thing I will ask any state government that is focus on infrastructure, because when you build infrastructure, it will create an environment that will allow for efficient and cost-effective productive activities. The second one is to look at the most vulnerable in the society and find ways of, first of all, equipping them with the skills that they need to survive. It's not just handout is not sufficient, because a lot of times people focus on handout. I'm not saying handout is bad in its entirety, because a person who is hungry and about to die of hunger needs to feed first before you take him to go and learn skills. But the most important thing is those who are most vulnerable should be retrained through skill acquisition scheme that will allow them to be productive. And I did mention, first one, the government should build infrastructure. Without infrastructure, you really can't have a productive economy, which is what we're suffering today. So if you have to commute from VI to Ikeja, the 10-minute alone, I was on that bridge by 6 a.m. and there was traffic up to Woloshiki. Why was this so? Because the very bad portions, the vehicles have to snake around to navigate through those bad portions as early as that time. And that is waste of productivity. Several places where goods are being produced are difficult to be transported to where they are consumed. The cost of transporting them is quite expensive. So if you build the appropriate transport infrastructure, then you talk of energy supply, electric energy. Of course, the state governments now, with the adjustment in the relevant law, a state government can actually be involved in the power generation, power distribution, and power transmission. So state government, particularly those where there is gas supply, should be able to build power supply that have island mode structure, where they produce and distribute within their locality. And that way, if you have efficiencies, we're going to have states competing with themselves. And then, most importantly, where it's cost efficient to produce, companies are being able to go and locate in those places. And other states will take a cue from there. And that's what we are going to do, because once that competition comes in, and people are saying, okay, I'm going to go to Abia State, I'm going to go to Lagos State, I'm going to go to Oyo State because it's cheaper to produce there. Then the other neighboring states will take a cue from there, and they want to build similar infrastructure to support and attract investors.
Finally, the MPC, of course, we expect them to meet soon. We don't know. Of course, we expect the new management of the CBN to come up. What do you expect when they go round that table, considering 26.72% is what we have from inflation? Are you thinking that we could have a shift of rates again at this time? For me, I don't know if you think that is working for us.
Well, today I've always maintained that the current inflationary pressure is not coming from excess credit expansion by the financial institutions. So it cannot be effectively fought with rate increases as to slow down credit expansion. It's a structural issue. We talked about the partial effect of Naira depreciation. We talked about inability of farmers to produce in their localities and bring the products to the urban areas where they are consumed. You need to address those two factors. I don't think the appropriate thing for the Monetary Policy Committee when they reconvene in November will be to increase rates. If you're increasing rates, you are further suffering the few business operators who are trying to do businesses. This sector of producers, because if you get to a point where lending rates are about 30%, which productive activity will, given the longer asset conversion cycle of manufacturers, will borrow money at 30% and be effective or be profitable in their productive activities. We should focus on the structural problems. And again, the Monetary Policy Committee has to deal with some other variables. We are seeing huge devaluation of the currency, depreciation of the currency. So you have to ask yourself, what measures can we put in place? And unfortunately, the challenges we're facing today are beyond monetary policy tools. The fiscal authorities have to be very up and doing. They need to work with monetary policy advisors to take the necessary measures to put the structures that will stem the depreciation of the local currency, as well as restore productive activities, particularly as it relates to crude oil production.
Are you seeing that handshake between the CBN and the Ministry of Finance and coordinating Ministry of the Economy? Are you seeing that handshake?
I expect that we're going to see that. We should see that. In the first place, I expect that there will be an economic management team that will comprise fiscal authority leaders, heads, and monetary authority heads, so that it will be some of these policies will be harmonized, discussed and harmonized before they are taken to the shop floor where they're implemented.
I must thank you so much. It's always nice having you on the show. Mr. Johnson Chukwu is MD CEO, Carrier Assets Management Limited. Do enjoy the rest of your day.
My pleasure.